All right, so the next thing I'm going to be talking about is pullbacks, right? So for every structural leg, there is always a pullback. So for example, if this is a structural leg, there's going to be a pullback, structural leg pullback, structural leg pullback. There are a lot of complex ways I can get to explain this. I can start saying, oh, the buy orders, sell orders, there's a liquidity pool over here and all of those things, but that's not why I'm making these videos. I want these videos to be short, precise, so you can watch them over again and be able to practice what it is in them, right? What I've recorded. So pullbacks, there are three different types of pullbacks, right? All this information I'm giving, they're not my information, right? I also learned them. So we have the shallow pullback, we have shallow pullback, we have the deep pullback, and we have a complex pullback. Now, this topic is also something I'm going to come back to after we look at liquidity, right? Because it's very important to look at this and liquidity at the same time. So what's a shallow pullback? Shallow pullback is when a retracement does not get back into the trading leg up to 50%. So for example, if you have this and then this just pulls back a little bit into this area, but did not get to the 50% level of this trading zone, this is a shallow pullback, and then price starts to buy, right? That's simple term. Okay, a deep pullback, for example, you can have something like this. Oh shit, don't mind me, guys. So deep pullback, you can have something like this. So this is a deep pullback. You can see this is the range. It came well into the range. We initially had a shallow pullback, right? And that shallow pullback now became liquidity for us for the deep pullback. So whenever price does not get to up to the 50% of a range and leaves a low or a high, that low or high is liquidity. So the same thing for sell scenario. So you have something like this. Price came, shallow pullback, then starts to sell, then eventually came back all the way, tapped and sold. This guy initially did not get to the full range, 50% range that this guy eventually came to. So this low became liquidity. Okay, so that's just the easy way to say it, right? Then we have complex pullback. Complex pullback is when you have both deep and shallow pullback in a way that there is no longer on mitigation. So for example, when you have something like this, shallow pullback here, then price came, tap this, that's already deep pullback. Then in the future, price now comes, raided your deep pullback, came somewhere here, and then boom, this is a complex one. That's why it's called a complex pullback. Why is price coming back? Price is coming back because even the deep pullback, below it or above it, there are unmitigated areas that price or either supply zone or support and resistance level that price can use to propel price to the upside. For example, at the point price came here, shallow pullback, price came back again, induced this shallow pullback somewhere here, maybe it's a gap level or something, then propel price to the upside. Then price eventually came back for the classic scenario level and then boom to the upside. So that's how complex pullback usually is. And the moment you get these three types of pullback, you're able to easily understand what happened in the market. Let me show you something that happened on EU today. EU. Okay, let me delete my drawings. So look at EU. Let's go to M30. Now this is not the best example, but yeah, let's have it. So the first break. So we have this guy. We have this guy. All of these guys got broken. Then we have this guy. So this initial pullback was a shallow one. You agree with me? So price came somewhere here and then sold. And then price came back again, and, induced this eye, right? Sold, but we didn't break this guy. Eventually, Price now came back to the extreme at this point and then sold to the downside. So this is an example of a complex pullback where price just keeps coming back, keeps coming back. In fact, I'm sure a lot of people wanted to sell, yeah, which is why we had this sell candle within that area. A lot of people wanted to sell there. So pullbacks are very important. Let me show you my examples. So look at this one. We have this buy over here. So price pullback, shallow pullback, right? Then came all the way, broke, came back again. So this is an example of a deep pullback, right? And then boom, we started to buy. Okay, so when you understand these things, even when price, for example, if you took a buy here and this was your target and price starts retracing, you not start feeling that, oh, maybe price is going to come and continue. No, you have an idea that, oh, there are unmitigated areas below your shallow pullback, making this shallow pullback a liquidity level that price will induce and then give you intent for buys to the upside. Okay, so let me look for another example. To see another example, it happens all, I think it even happened on gold today. There was one on gold today. Let me show you what time frame is that. M30, I think. Delete this niggas. So let me just go to M15. Yeah, good, M15. So look at this. Look at this. So initially, see, we dropped, we retraced a little, shallow pullback, right? Then price came back, induced our shallow pullback, came back to this guy and sold. The same thing here, right? We retraced a little, shallow pullback, and then deep pullback. Price came back, tapped this guy, and then sold. We'll see the reason for tapping those guys later on, but we're just focusing on pullbacks for now. Pullbacks. So when you have certain type of pullbacks, you have an idea what to expect, what to, you're not in a hurry to do something. So look at this, for example. Look at this. So we have shallow pullback, yeah, right? Price came shallow, didn't break actually, and came back for a deep pullback into this level. Watch this. Then we eventually broke. Again, when we broke, we came back a little, right? Tap this, but we left the classic SNR. Let me show you that part. This is very important, guys. This is bread and butter for many guys, because if you understand this, your expectations would also change. You would know, you have an idea what to expect next. So see, initially we used this broken gap level over here, right, for the pullback, and then we broke. Price was going up all the way. Everybody's happy. We're buying. Gold is buying. Gold is going up. Then suddenly gold came all the way down. Why? To use the classic SNR and to induce this previous guy. So this is a type of complex pullback because this initial pullback was deep enough, right? It was deep. It's more than 50% of the range, but it's still liquidity. This is the last low before this main low. That's why I said when we talk about liquidity, we'll cover this in a much more better light. So again, price came, tapped, and then boom, we broke. So that's the interesting parts. Let me find one last example, and then I'll call this video. We'll check something else. Okay, just one last example, guys. One last example. So look at this. So you initially have this shallow pullback. So shallow pullback are usually from there's what we call a direct trade or immediate pullback. So for example, this broke. The immediate pullback will mostly be a shallow pullback for price to use that side and then break again. And eventually in the future, price would come back to the extreme to use and then sell off. All right. So complex pullback, deep pullback, shallow pullback. These three kinds of pullback can inform the way you look at the market and how you trade. All right, guys. I'll see you in the next one.